Okay guys, I'm going to go into Ask Scruff on the Traders Clinic and see what the questions are. So let me just set the chart out, you watch the intro and I'll come back. And a warm welcome to one and all. So I've got my coffee so I can take my time having a little look at this and get it done correct. So this is the Discord that we go to, and in it there is the Traders Clinic, which is here, and the guys ask me various different questions, whether it's just a request for a chart. Did WTI, did that before, and I start putting it in the markets, updates, etc. And we also have Ask Scruff, where the guys ask me questions and I come to camera like this and I answer them. I'm kind of going to go through these. This one, I'm going to do a full video on it. Likewise with Smiler here with gold. So I'll be doing a full breakdown for the guys, how this works and what to look for. Now, I'm up to this question here and I did answer Bill's. Module 14, the arrow system is exactly the same as the spreadsheet. The spreadsheet just visualizes a little bit clearer, but it's based on general direction, whereas the sheet takes you through the whole process. There is an actual section that does +1, -1 on the sheet, and that triggers in also. Okay, so I don't really need to do a video on that one, but we do need to do this one for Lucy. So a little salute to you, my girl. Would you say it's best for traders starting Forex, DAX, gold? Watching them all and feel it's too much? You're not wrong. Now, when you say Forex, that's a wide spectrum because there are 28 main pairs and they're made up of major, minor crosses and majors. Now, when it comes to DAX and gold, personally, if you're a beginner, I would say those markets are too dangerous. Gold especially. Now, there are two versions of gold. You have spot gold, which doesn't move that much in the grand scheme of things. You look at it, you think, well, that hardly moves. But you can put a big position on it. And because it's relatively slow, it can be sometimes hard to gauge. But the shape of the market is identical to gold crossed with US dollar. Now, for some reason, that moves ridiculously quick. And it is kind of a contradiction in terms because, well, if the shape's the same in spot, it's just kind of the way that they are priced. If you're trading gold versus dollar, I would say for a beginner, you need, well, let's put it this way. You need a big account to trade it because if it moves, you know about it. It's great if you're on the right side of it, but it's not so great if you're on the wrong side of it. Okay. And the DAX is similar. The DAX can be, I nickname it the widow maker. I trade the DAX a lot because I understand it and I've traded it for over a decade. And it's a good market to trade. Now, because it moves brutally, again, for a beginner, it can be a little bit too fast. Why is it fast? Well, there's only 40 companies made up in the DAX index at this moment in time. It used to be 30, which meant only one of those companies could make the volatility just explode, you know, from just one. When you've got something like the FTSE 100, well, there's 100 companies on it on average. So it smooths it out a little bit. So the FTSE is a little bit easier to trade. And then you have the S&P 500, the US indices, that has 500 companies in it. So again, it smooths it out a little bit. Okay. Think of moving averages. You know, a low moving average like a 5 is quite whippy, but a 200 is relatively smooth. That's the principle with the indexes. So personally, a beginner, I wouldn't necessarily trade the DAX and gold, but that's not to say you can't watch them, because what you can do is look at a correlation. And if you're looking at a correlation, you would have gold, DAX and euro dollar. They are all loosely correlated because the dollar is connected to gold. So if you see a spike in gold, that will affect the dollar. If the dollar is then spiking, it'll affect the euro. So you can see the trade-off there. And then the euro will affect the DAX. So you could use gold in the DAX as a barometer to trade euro dollar. Likewise, if you're living in the UK and you want to say trade the pound, you could have gold, FTSE, pound US, and the principle would be the same. If the pound spikes, it'll affect the FTSE. So you can see warning signs. Now, when it comes down to Forex, I would only ever look at it, maybe as a couple of pairs. I would discount DAX and gold altogether and just use them as barometers, as I was saying. And then when it comes to which pairs do you pick, you have major minor crosses, sort of like pound JPY, which is a minor cross. It's very fast. Again, you need a bit of experience to work it. It's a good market, but if you're on the wrong side of it, you know about it. So look at a good market that is cheap to get into, very tight spreads, and then just, I was going to say specialize. I suppose specialize is the right word. And then specialize in it. So it could be, if you're trading London hours, euro dollar or pound dollar, right, for London. If you're looking at US hours, in other words, the New York session, US JPY is a good market to look at. Also, Australian dollar, you know, they're a good market. And then if you're looking at the Asian session, kind of stick to something that has JPY in it. New Zealand JPY, Aussie JPY, and look for the trade to be a little bit longer in playing out because it's a slow session. But mainly for day trading, look at the London or the New York. So I hope that kind of makes a little bit of sense. We will revisit these things time and time again in the group. And if you're stuck, I'm very easy found. All my contact details are below. And as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you on the next one.